Congrats on your YouTube channel.
Welcome back to Fibonacci-Traders Talk. Today we have a professional swing trader, Matt, from the Equilibrium. Matt have over 20 years of experience trading. Great to have you. Thank you for taking the time to have this talk, Matt.
It's a pleasure to finally meet you and to be on your YouTube channel and to have this discussion. So thank you for asking me to join you. It's been nice seeing all the information and all the charting work that you do on Twitter. So it's always good to put a face to a name, and excited to talk with you.
It's a pleasure, my pleasure. So we'll start talking about your background and what pushed you into trading. I know you're like more than 2 decades or so trading. So what took you to this path?
Yeah, so I started a long time ago. My background is definitely completely self-taught. I don't have, Wall Street pedigree or anything like that. So completely self-taught. And I think I just kind of came towards trading in a circuitous route. Really, I basically got interested in investing and trading when I was younger, thinking that one day I'll have some money to be able to actually trade and invest with, and while I was working really hard and trying to save some money, I thought, I'll try to learn what to do with money when I actually have it. Right. So that was, in a nutshell, the beginning of my thoughts about trading was just wanting to know what to do financially, when I'm in a position to control some capital. So just dug into every kind of information that I could about investing and trading when I was younger. And this was even pre-email, honestly. So it was like, you had to do it the hard way. I mean, there's so many tools available now. But long story short, over a long period of time, made tons of mistakes, and did a lot of things the hard way. That's for sure. Did as much kind of reading and learning about the market as I possibly could from every source I could possibly find. And I have had another career entirely. Like, I've gone in and out of full-time work as well. So it's not like this was the only thing I've been doing for the past 25 years, but it has been a major passion. And I've gone in and out of trading full-time, and it has become something that has really dominated a lot of my life. That's for sure. So basically, self-taught, and the tools that are available now are just absolutely unbelievable. And one of the things I try to do, and that I know you try to do, and a lot of people try to do, is help people from making the mistakes that we've made. So I've made a ton of them. I've made all of them. So I think in the my basic trajectory was wanting to learn, not having a whole lot of sources to go to, and just doing it the kind of the hard way, like trial and error, and figuring things out that worked for me. And it's been really a blessing, actually, to find people on Twitter that you can have a conversation with. Because honestly, when I was starting to do this in my 20s and early 30s, there was kind of nobody to really talk to. So I think, even this conversation that we're having is kind of, it's like miraculous in a way, the ability that you have to converse with people that are doing the same thing that you're in. Because I felt like I did a lot of this alone for a long period of time.
Yeah, as we talked before, you are one of the first Twitter accounts I started followed when I opened my Twitter like 3 years ago. I'm trading only 5 or 6 years, so compared to you, it's like I'm still in the beginning of my journey, and we are all, every day is the next step of the journey. It's an endless journey until we decide to just finish the journey and go other path. So
Exactly.
what are your early mistakes that you can point, the biggest mistakes that you can point that will help us maybe avoid and learn from those mistakes?
Yeah, I mean, my joke is that I made all of them, right? And it feels like I made all of them. But I think the biggest one I definitely made in the beginning, which I think a ton of people do, is that you're starting off, and especially when I was much younger, you're starting off with a small account, right? And so you're trying to grow this account, and you have these dreams of making it happen overnight, and you just kind of put risk management on the back burner, and you don't focus on risk management. You don't focus on longevity. You focus on trying to be aggressive and take a big swing, and try to compound your account very, very quickly. And that ends up in doom in a lot of ways. So I think my ultimate biggest mistake in the very beginning was really just not adhering to a risk management plan. So that's something that I learned from right away, the hard way, by losing money, by blowing up an account, and you learn from it, right? And you pick yourself up, build up an account again, and then you actually follow a strict risk management system and then you stay in the game for a long period of time, right? So I think that's the number one early on lesson that I learned. Another one that I think is really, it's a continual lesson is patience. It's a lesson that I still keep learning, because I think in the early days I was prone to over trading, trying to be overactive, trying to just catch every move, and like every kind of style I could think of. If anything even remotely looked like a trade that made any sense in any form, I would take it. When I was just trying to figure out what my style was, I was just jumping from style to style all over the place, right? And I think that was one of the biggest mistakes I made. So those two are probably the biggest in the beginning, is not having a risk management plan and just trying to take every single trade, trying to play every single move in the market, being overly aggressive without actually having developed an actual edge. And that the patience thing is something I still work on, especially in a market like this. And I think, honestly, what's interesting, and I'm going a little off track here, is that this may be, honestly, the third worst bear market potentially in the past 20 years. It's possible, right? In terms of duration, at least. For me, I think the lessons for this one are actually more interesting than when I started off, like in 2000, where that was a really nasty bear market, or in 2008 when I had more experience. This bear market is really showing me that I have developed an amount of discipline, and it's kind of really hammering home the patience aspect of it. Just day after day after day, this whole year has been this exercise in patience, and it's amazing how, over the decades, I'm becoming more aware of the things that I've learned. So it's really interesting. So I think those two things in a nutshell: risk management and patience. I'm still learning patience.
Yeah, risk management is number one, because from my opinion, this is the only thing that we as traders, and I keep saying it also on Twitter, on my post, and also now on the videos that I post in Twitter, in YouTube, and also you are one of the maybe the only Twitter accounts that really focus on risk management. Everybody's focusing on taking this Lotto Friday, this trade, this short, this long, this meme stock, and people that are new don't understand that the only thing that we are as traders have control of is risk management. Is how much am I willing to lose on each and every trade. That's it. Because as Mark Douglas, the great Mark Douglas, said, the only thing that we have control of is risk management, because once we put a trade, anything can happen.
Right.
So yeah, I can relate to risk management and patience. Patience is like a muscle that we all need to develop each and every day.
It never ends. It definitely never ends. And it's something that, you're constantly trying to work on, because I don't care how much experience you have, you're going to battle with yourself. Right. And it's that patience thing versus, the person inside all of us that wants to be active and doing something, and I think it takes seat time. It takes a lot of discipline. It takes a lot of just kind of experience to realize that the real edge in what we're doing is the risk management. That's what keeps people around. The people that you're seeing on Twitter that have been here for 10, 15, 20 years, they're all focusing on risk management. That's all they're doing, right? There's an edge, and setups are there, and they have a tactical system and all of that. But quite honestly, I think that's the easy part. I think the harder part is managing your risk and managing your exposure and managing when you're getting aggressive and when you're getting defensive. I feel like that's the harder part.
Yeah, it's the toughest one. Yeah. So what did you learn from all this journey of failure? I suppose that the first couple of years were like hell, if we can say that. This is what I went through.
I had no idea what I was doing. I thought, like, I mean, honestly, now I'm a swing trader. I have a very defined, like, time period. I've defined parameters. I defined my expectations and all that. In the very beginning, it was like, I'm going to buy XYZ stock because I like this company. And I had no concept of price action or anything. I got fundamentals and technicals all wrong, and I had no idea in the very beginning. I mean, most of us have absolutely no idea what we're doing in the beginning, and I definitely was one of those people. There's no doubt about it. And then over time, I started to really figure some things out, and the hard way. And I end up at the point where I think a lot of people do it, and they probably end up there a lot faster than I did, quite honestly, because in this day and age, you can find a lot of resources that can tell you this is what you should be doing, this is what you shouldn't be doing, and you have a lot of information to pick and choose from, and you can ask people questions and all that. But I think I was starting off making the mistakes where I was not following price, arguing with the market, like, this makes no sense to me. Why is this going down? All of those stupid things that I look back on now and I can kind of laugh about. But I definitely made all those mistakes in mindset, all those mistakes in execution. I would very initially would not honor my stops, or would enter a trade without even putting a stop in, which that is my number one rule, that you always put a stop in whenever I enter a trade. So there was a time when I didn't do that and learned the hard way, right? And so I definitely have learned the hard way, where I enter a trade, either canceled a stop or didn't put a stop in, and it just keeps going lower. And you just keep saying to yourself, how much lower can this possibly go? It's got to reverse, right? So I definitely was that guy at some point a long time ago, but I was that guy and learned from it. And maybe that's the best way to learn from it. Maybe the best way is not having somebody tell you, this is what I went through. Maybe the best way is to actually get burned and live through it. But I try to, and I think a lot of us try to help people by relating these experiences we've been through and the kind of problems that you can get into if you're not paying attention to just some key rules.
Yeah. So you mentioned technicals, you mentioned fundamentals. What's your take about technicals versus fundamentals? Because also when I started trading, when I started even figuring out what is the stock market, I went fundamentals. Amazon is big one. Facebook is big one, so I buy them. But then you see, okay, they are all going down, or it doesn't make sense. Like you said, how come Amazon is like going down and down and down and down? It's Amazon. It cannot be. Right. It should go up. So what are your take for technicals versus fundamentals?
I think initially a lot of people have that thought, right? Like, the market must move on fundamentals. What else is it moving on? Like, it must move on. There must be, earnings is the reason why the market's moving. And I think you start to realize that, first of all, it depends on your time frame, and second of all, that is definitely not necessarily the case. We see right now with what's happening in the market is contracting multiples, and it doesn't. The fundamentals are, what the fundamentalists are keying on right now is completely different than 2 years ago, right? 2 years ago, it was nothing but explosive growth, and that was the extent of your fundamental analysis. Is this company growing explosively? And that's what I want to be on. And that's what the market's going to reward. Now the market is not rewarding that at all, right? If you're a company that has no earnings per share, but you have explosive revenue growth, the market is not rewarding that right now. So its market environment changes too on what the fundamentalists are keying on. But for me, everything quickly became about price action, because that's the only way I have of anchoring any of my decisions in the stock market. There's, it's not this intellectual thought that I have about fundamentals going on that's going to tell me where I should enter and where I should exit. It's price action that's going to give me an actual place to kind of enforce my logic on the market, meaning my entries and my exits. That's my logic being implemented on the market, and I can only do that through price action and volume. So at this point, and defining my trading horizon as being a swing trader or a position trader, I mostly am a swing trader, really. For me, the technicals are all of it, almost all of it for swing trading, because if my time horizon is, let's say, in this market, 1 to 3 days, quite honestly, but in a good market, it could be 3 to 7 to 14 days, in that range, in a really good market for swing trading. And I just don't believe, and it's not my experience that stocks are moving on fundamentals in that time frame. They're not moving on fundamentals in that time frame. You can catch a trend that is being boosted by fundamentals, that's for sure. But price action is what is dictating those moves in that time frame, and that's what I want to pay attention to: price action and volume. So fundamentals are not what I'm paying attention to when I'm swing trading. I leave that for, quite honestly, the big hedge funds and the research crews that will always do better than I'm going to do researching fundamentals. And they're the ones that are going to deploy large amounts of capitals based on the fundamentals. And then I want to follow them, honestly. And I follow them through price action and volume. So it's not my job for me to dig into the fundamentals of every company. And if I tried to, honestly, I'd probably never place a trade, right? If I was really trying to learn everything I could possibly learn about every company, I'd probably never have any time to place a trade, right? So I'm not going to pretend like that's my forte. My strength is in being able to move in and out of the market quickly as a retail trader, which is what institutions can't do. And I base all those decisions on price and volume. That being said, if I take position trades and want to be involved for, a few months, let's say, I will definitely look at the fundamentals, and there will be certain parameters that I'm looking for, but I really call that skimming the fundamentals. It's not like I'm really digging through the fundamentals or anything like that. I'm just looking to see, how solid is this company, because you have to have a little bit more conviction if you're going to hold for a few months. But my primary swing trading time frame, technicals absolutely outweigh fundamentals all the time for me.
Sounds perfect. So how do you handle, especially this kind of market, when it's like slowly grinding to the downside as a swing trader? Because every day opens, starts, and the volatility inside the day, sometimes you have the spines and the cues moving like meme stocks. They open like, yeah, it's like they open -1 and they close 1.5 above. Like, how do you prepare for swing trade, even holding 1 to 3 or 4 days? Every day can, like, you enter here, the next day it's like boom to the downside, gapping down.
Right. So this whole year for me has been about defense. This is not a year where I'm trying to aggressively grow my account at all. Like, I understand, my system, my primary bread and butter trades are to the long side. Generally, I do trade short, but they're very short duration trades on the short side. I don't get aggressive on the short side. So my bread and butter system relies on consolidation patterns in stocks that are moving higher in a bull market. So this is not my year, right? So for myself, there are some people that love going short and are super aggressive in day trading. That's not what I do. So this year I've been very, very defensive and sticking to my plan, which is I'm not gonna swing at bad pitches, right? To throw in a baseball analogy, I'm not just gonna sit here all year long and try to manufacture trades and get chopped up and throw my capital away, right? So this has been a year where I'm really playing defense. And we're talking on, it's Sunday, November 6th in the United States. I know you're in China, so it's already Monday. But our most recent market day in the US happened to be a day where the indices literally gapped up about 1.5%, almost immediately filled that gap down, and then ramped higher again, almost 2%, and then reversed again, another 2%, all before noon. And there's no way that's the environment that I want to get aggressive in. So to answer your question, what I have been doing is I have been taking much fewer trades, probably something like 25% of the trade, the amount of trades that I place in a normal year. And I've been taking much smaller sizing. And I'll honestly have maybe 1 or 2 trades open at a time. And there have been weeks at a time where I simply do nothing. So I've been far less active, and I've been very, very aggressive in cutting losers. So the only way I've been able to make the math make sense this year is cutting my losers very, very, very short. Much shorter than I normally would. I will very infrequently wait for a trade to hit my stop. I'll just cut it. Because on the upside, I'm getting much less distance on the upside, right? Whereas in a bull market, I may get, standard returns of 3R, 4R or something like that. I'm getting like 1.5R, maybe 2R, so that means I have to cut the losers really, really short. And I've just made modest gains. And that's what I've been doing this year. I'm up like low double digits on the year, honestly. So, but I'm happy to be green, and this is not my year to be pushing the gas at all. So defense has been the name of the game. And I think that goes into what I was saying before, is the patience aspect of this that I hope people are learning through this year, because this is a great teacher. 2022 is a great teacher of patience. Instead of giving up, people should be still engaged in the market, but knowing, that this is not a market, depending on your style. If your style is like my style, it means that, you should not be engaging heavily, but there's absolutely no reason to disengage, because you need to be around and you need to have your confidence intact, and you need to be ready to take action when the opportunities arise.
Yeah. I think one of the key components that especially new traders needs to understand, that The most difficult position to be in is to be out. You just sit, watch everything moves, and do nothing. This for a long time, not for 5 or 10 or one day. If this is not the market that you are comfortable in, or the price action that you don't feel the 200% confidence in, just sit on your hands and wait. Even waiting like you do, months and months to this 2022 maybe will get over. I think this is the worst part, just, and the toughest one. Just sit on hand and do nothing. Do
Yeah, I
nothing.
mean, I think if you're, especially if you're a trader that hasn't really developed confidence in your edge, you should probably be doing nothing this year, honestly. Like, I'm not doing, I've had some periods where I'm doing absolutely nothing, but I still test the waters and kind of take test positions, and I've gone short, and it's interesting because I'm usually around 50% winners for my long trades. This year I'm at 35%, which, go figure. It's a bear market, right? So I'm fighting the trend when I'm taking long trades, and my short trades are around 50% winners. So obviously doing better on the short side, but I'm trading much, much less. And I'm scaling back tremendously, right? But if you don't have the confidence and the kind of understanding of your own process and your own metrics, you really should be sitting out during a year like this, because you're just going to get eaten up. Now, every time I post something like, I think, there's no shame in waiting, or exercise your patience, anything along those lines, you always get responses of, but this happened and that happened and this happened and this moved 6 million percent. And it's like, great. If your strategy is catching those moves and that's what you do, that's awesome. I mean, that's not what I'm talking about. And you can't put that in every tweet, right? No, like, I can't have a disclaimer in every single thing I say, right? And we're all talking about what we're doing. We're not trying to address like the entire planet and what they could possibly be doing, right? So if your strategy is one to take advantage of this volatility, you're a day trader, for instance. I am not. Then go for it. Have at it. Maybe you're thriving in this volatility, and trying to catch all these moves. But for me, this goes back to what we were saying at the opening. I don't need to try to catch every single move. Every single day, there's a potential to trade, right? The market is open. Every single day you could trade something, right? So I think people get lured in just because the market's open, and they'll see XYZ stock move 10% today. Why wasn't I in on that? And they think that the goal is, and that experienced traders must be catching all of these moves and must be exploiting every single strategy that's going on. And that's obviously not the reality, right? So I specialize in something now after all these years of doing things, without any real purpose, and kind of doing things a lot at random in the very beginning years. And now I specialize in certain ways of trading. And if the environment is not right for those certain ways of trading, I'm going to be much less active. And it's as simple as that. But I think that a lot of people fall into the trap of just thinking, because there's volatility out there, and I'm a trader, I should be, capitalizing on all this volatility. And it's just not true if that's not what your system is built for.
Yeah. You talked about trapped. I think one of the biggest trapped out there is social media. If you take Twitter, if you take YouTube, for example, when I opened my YouTube channel like 1.5 months ago, when I started, I had YouTube to learn from. And then you open YouTube, you say, okay, trade stocks. You see everybody with those thumbnails, 500% in 15 minutes, the best strategy. This is the strategy that will give you 97% winning. So as a new trader, wow, these guys are awesome. They make like, and then you start thinking, okay, no, it doesn't work like that. There is no 97% winning strategy. Right. You have a 50% chance when you take a trade. Doesn't, if you're a scalper, if you're a day trade, if you're swing trade, if you're a position trader, that's it. It's 50%. It goes your way or the other way. That's it. Right. So what are your thoughts on, I know what your thoughts on social media and Twitter especially, if you like to share with our viewers.
Yeah, I have a lot of thoughts on social media, so I'm not going to go into all of them, right? We all have our own thoughts on it. And things are changing. Things are certainly changing, that's for sure. But in terms of financial Twitter, in terms of FinTwit, I jumped on early on. Like my Twitter account was started in 2008 when people didn't like, I didn't really know what Twitter was, right? So I started, and we had the 2008, 2009 financial crisis. I mean, it was bedlam, right? And it was a crazy time to be on Twitter. And then I took a long break. I took about a 10-year break, honestly, from Twitter. I don't have any other social media. So Twitter's it, and it's strictly because of the stock market people that I've met. You know, that's the only reason I still engage in it. And I think it's a double-edged sword. There's a lot of value in it if you kind of manage your expectations and you know where to look and you engage with people in a helpful way. I think there's a lot of value in it. I've met some really good people, yourself included. I've met some people that like I met a long time ago, like Sunrise Trader is somebody I'm sure you're familiar with. It's one of the first people I met on here. I don't even know the guy's first name, but I have been interacted with this guy for 14 years off and on, and we have a rapport. We like respect each other, and there's a lot of value that can be gained from meeting like-minded people and learning from them and interacting with them, so that you don't feel as if you're trading by yourself. Because quite frankly, in the very beginning days, it was a very lonely experience, and I felt like I was banging my head against the wall and I didn't have a lot of feedback from anybody. So there's a huge advantage to being able to learn from people, but it is a huge double-edged sword, and the negatives are big as well. And you can, especially if you're new, I think you can really get sucked in by the fantasies that are being thrown around. The things that just do not reflect reality. Like you mentioned, the people that throw up the,
Saved
P&Ls
by the bell crew.
Right, the things that are just ridiculous, things that just make no sense. And there's no doubt there's a lot of people trying to sell fantasies on Twitter, and that's the way it is. So there's that marketplace for fantasy, and then there's the reality that if people are trying to build up a following, which is what a lot of people are trying to do, especially if you're selling something. Let's face it, some of the aggressive ways to do that is by promoting kind of like a fantasy land of trading. Like, hey, I'm here, I'm doing all this, and look how successful I am. Look at me, pound your chest and say how good you are at everything, and that gives people a really skewed version of what real trading is. And it's kind of like the least sexy thing in the universe to talk about risk management. And it's one of the things I talk about all the time, right? Because my goal is to try to just throw the truth out there, because I feel like that's going to help people the most, whether they kind of realize it or not. That's what's going to help them the most. It's not something that like the Twitter algorithm is going to love. It's not going to get me 9 million followers. It's not going to get 6,000 retweets and things like that. But it is the real truth, honestly. And that's all I know how to throw out there. Like, I'm no good at, and I don't want to do it, and I'm no good at trying to promote like fantasy land. If I don't believe in something, I'm not gonna push it, right? But there are people out there that are happy to try to promote a fantasy world of trading, right? And in a time like 2020, when you had a lot of people get on there and think, hey, you know what? I'm gonna be able to quit my job. I can't believe I didn't realize this earlier. I can quit my job and I can just day trade options now, and like this is gonna be so easy. This is fantastic, right? Yeah. So there's people that tried to take advantage of that, obviously, and we don't need to go into like specifics, but everybody has seen, the kind of fantasy services that are sold and things like that, and it's like buyer beware. So there's a ton of garbage on Twitter, but there's also some really, really, really good golden nuggets of people to follow and people to interact with, and people that are genuine people, like kind-hearted people that are willing to share and teach, and genuinely help people. And that's the kind of fine line you're walking every day when you engage on FinTwit, is because there's both sides happening at all times. And I think, if you strip out the people that I would call are actually intentionally trying to mislead people, strip all that out, because we all know that exists. There's still this feeling, because you're getting so much input, that you should be reacting to all of it. You're right. And I'm not saying those people are putting out bad advice or intentionally trying to fool people, but just because you're getting so much input on Twitter, especially if you're new, you're just so tempted to keep pushing buttons, and your opinions get swayed, and you're so easily distracted by this external input, that I think that can be really difficult for new traders. And you have to really be able to tune all that out. And the way to tune all that out is to learn a process and a system for yourself that is your guidepost, rather than Twitter.
Yeah. Too much information, too much noise with all the social media, especially now also with TikTok. Traders, like so-called traders, putting themselves on TikTok with the Lambos and the Rolex, and look at this, I have a pool, I build a mansion.
Right.
Yeah, like you said, selling it's easier to sell a fantasy
Right.
rather than sell risk management. Let's be honest.
Exactly. And then the reality is, and I think it's unfortunate, but it's the reality. It's human nature. I think there's a lot of people out there that want to buy that fantasy. Like they're happy to buy the fantasy because they want that. That's what they want. They don't want to be told the reality of it. They want something to happen quickly, right? And it's one of the things I say all the time is if you want this to happen overnight, it's going to take you even longer. Because if you're in a hurry, if your whole goal here is a get rich quick scheme, you're gonna get hit really hard, most likely, because the only way, quite frankly, that people compound their account in gigantic sums really quickly is by taking on enormous risk, or you get just super lucky, right? But the people that the ones that are telling the truth, that have made gigantic, like ridiculous gains in a very, very short period of time, are taking on tremendous risk, and you're not hearing about the thousands and thousands and thousands of people that just blew up their accounts trying to take on tremendous risks, right? So it's just you have to be very careful what your goal is. So if you're, I try to tell people that the real gold mine here is being in the market for a lifetime. The real gold mine is longevity and being able to compound your account over time and be the person that's in control of your account. That's the real gold mine. And it's not a get rich quick scheme. It's actually something that takes a lot of discipline, a lot of work, a lot of trial and error, a lot of dedication, a lot of perseverance. But the end result is fantastic still. If you're in the market for years and years and years, and you have good risk management system in place, and you can take advantage and get aggressive at the right times, you can do very, very well. But it doesn't happen overnight. It takes time. Yeah. And a lot of people don't want to hear that. They want to hear, oh, you can quit your job right now. You're going to be a gazillionaire by next Friday. And all you have to do is pay $100 a month and I'll teach you how to do it. Right. So people want to hear that. And let's face it, not a lot of people acknowledge that that's what's going on. Right. But that's definitely what's going on in a lot of corners of FinTwit. And I think people just have to really be careful of that.
Yeah. I think people need to invest in their own education, to learn their own strategy, their own tools, what works for them, because what works for you doesn't necessarily works for me, and what works for me doesn't necessarily works for you. But I can learn from you, and maybe you can learn from me, and just take a little bites from each and every one that you meet face to face, or on Twitter, or even on YouTube, but just pick the right spots and put it in your own strategy. So yeah, but as you said, it's easier to sell Disneyland tickets than to sell the shop that sells, I don't know, water faucets or something.
Right.
It's like this analogy that came in my mind. Risk management versus Rolex and Lambos on Twitter.
Right. And I think a lot of people see through all that stuff, right? But if you're a beginning trader, you can really get confused, and you can think that, hey, this must be a get rich quick scheme. And then in my mind, I think you miss out on the real benefit of the market, which is actually being involved for a lifetime. That's the real benefit of the market. And if you can get a system in place that is unique to you, you got a bright future ahead of yourself, and that's the goal. But it takes work. It takes time. You can't follow your way to success. You can't sit there and just get alerts from somebody and expect to know how to trade and have any idea what you're doing. You have to put some time into it, dig into it, get your knuckles bruised, and engage. And I think a lot of people also don't understand how personal of a journey this is too, right? It's like, I use the instrument analogy a lot. I play the guitar, so I'm always talking about the guitar. But it's like if you hand somebody a guitar and you say, play these 3 chords and play this solo around it, you're going to hear 3 completely different things from 3 completely different people playing the same guitar, playing the same music. It's going to be different. There's no way they're ever going to be 100%, right? And that's because everybody has their own unique way of going about things and their own unique personalities. And it's absolutely true of trading. Like, we may have entirely different strengths and weaknesses, and you have to develop a system that plays to your strengths and weaknesses, something that makes up for your weaknesses and plays to your strengths. Like, there may be somebody who is extremely capable of holding through longer drawdowns. That's just kind of hardwired in their personality. And there may be somebody that absolutely cannot, and they can only hold for a very short period of time. And that's the day trader kind of person. And, there's ways of tweaking things to your own personality. I don't think people realize it's so built around your own personality, your own weaknesses, your own risk tolerances. That's why following somebody exactly is never going to work.
Never.
You have to do exactly what you said, which is, you can learn from people and take nuggets from them, take pieces from them, adapt things that they do and make it your own. That's the way you eventually arrive at kind of the thing that works for you.
Yeah. So how do you deal with emotion? I'm not talking about emotion. You need to also deal with the winners' emotions, because when you have a streak of winners, you became like a peacock. Your chest get blown out, and I'm a great trader, like everybody was in 2020. Oh, it's so easy. I'm a great trader. I can do millions.
Right.
Tomorrow I'm going to my boss and tell him to shove it, you know where, and things like that.
Yeah.
But then came 2022,
Right.
and the market said, okay, I can take you to the moon with all the emojis, but I can also bury you in the ground.
Right.
This is the market. This is exactly what it's doing. And
Right.
so how do you deal with those drawbacks, with the, maybe for you because you're very experienced, but how do you deal with the emotions of a losing streak, or you know my meaning?
Right. Yeah. So I think, I've definitely come to the point where I have very little ego in the market, right? Because the market is going to do what it's going to do, and you will lose every single argument you have with price. That's one of the things I say all the time. You're going to lose. The market's going to do what it's going to do, and it doesn't care what your goals are, right? So, you have to sort of become somebody who's not trying to be right. You're just trying to exploit your edge. So I'm not trying to be right about things. I'm trying to be profitable over time. So I think once you get rid of that ego, it helps you when you take losses as well, because I think initially people think that they are it's like taking it very personally when they take a loss. Like, it must be something bad about me. I did something wrong. And that's the way the market is. The best traders out there, Mark Minervini specifically says he goes in every trade thinking it's going to go against him, and like he's almost surprised that it doesn't, right? Because that's the way the market is. So you have to get rid of that ego once and for all, right? And that's a hard thing to do. But I do a couple things tactically as well, which guard me from getting too emotional about things, because you're always going to get emotional. We're emotional creatures. It's not like,
Yeah.
I mean, the phrase is always like, get rid of your emotion. And the reality is we're never really getting rid of our emotion. What we're doing is kind of understanding what our
Yeah.
emotions do and how they play into what our actions are after we, acknowledge our emotions. What we have to do is acknowledge that we're not going to act on some emotions and dig ourselves a bigger hole. That's what we're really doing. We're not just eliminating them and becoming robots. But a couple of things I do tactically is just really firmly, again, back to risk management. For me, I never have total open risk. Even in 2020, I never had total open risk that went above 6% of my account. So at any given time, if there was just like a flash crash, if things just absolutely took a nosedive, I'm never taking a single drawdown of more than 6%, period. I just refuse. Right. So, and you have control over it, I mean, barring, some sort of catastrophe where the market gaps down 30% overnight or something like that, you have control over how much you can lose. So I know that I don't ever want to take a single day's loss bigger than that ever. Right. So I set myself up so that never happens. And if that ever does happen, I then take a break. I just a cooling off period. The other side of that is that I will always use stops, right? So, and my stops only go up. So if I get stopped out of a trade, that's my stops protecting me. So the emotion of shoulda, coulda, woulda goes right out the window, because this was pre-planned. So the stop hits, that's the risk that you put on all, in every single trade. You can't control it. You're going to at least, even in a bull market, my long trades are losers 50% of the time. So you expect it to happen. So over time, I think if you adopt some of these strict risk management tactics, you start to kind of get a hold of those emotional swings, because you're not going to go through those depths of an emotional turmoil as you would if you, let's say, canceled a stop or didn't put a stop in, and suddenly a stock is down 30% on you, and you're sitting there wrestling and up at night. Should I sell this? What should I do? Should I wait? I'm like, you don't have that emotional turmoil going on. And I think that happens to a ton of beginners. Obviously, the pros are long past that, but I think that's one way of dealing with it. So I never let drawdowns get to the point where it's really, really hitting me emotionally. The things that I do get pissed off at myself with are unforced errors. Things where, like, if I'm over trading, or if I get the sense that I'm trying to chase something, and if you're honest with yourself, when you're chasing something, and that's when I get frustrated with myself. And if I notice myself doing that, I'll shut it down. I'm not perfect. I'm not a robot, but I've had enough experience doing this where I can recognize when I'm doing these things, and I shut it down, and I'll take a break, and I'll acknowledge, hey, you know what? That was an unforced error. That is not the way I normally do things, and I'm stopping for a little while. So I think that's how I combat kind of the emotions of it. But you have to be resilient. You certainly have to be resilient, because you can get absolutely kicked in the stomach repeatedly, and you still have to get up again, and you have to trust in what you're doing and not get scared and all of that. But I think for me, the tactics of reducing how deep a drawdown can be really keeps me from getting into those emotional spirals.
Yeah. We always talk about risk management on taking the positions and how much you're willing to lose and everything. But people need to understand that we also need to know ourselves and our emotions, and how to put risk management and stop loss to our emotions. Because if we took a position, swing position overnight, and we don't sleep over it, then your risk management is out there. It's way off.
Right.
Just
you should definitely be able to sleep at night. There's no reason to be doing, if you're not able to sleep at night, or those people, it's funny to think about people like screaming and yelling and like throwing their computer off their desk. If you're anywhere close to doing that, honestly, during the day, you're way oversized. It should be pretty even keeled. I mean, you can get disappointed, certainly, but not to the point where you're losing sleep or having a temper tantrum or going crazy. I think we have all done that at some point, early on. I certainly did. And we all get stressed out and know what that's like. And that's something you learn from. And you want to avoid that. So when I talk about total open risk, I'm talking about when it's a bull market, like in 2020, sometimes I had 10 open positions, but I made sure that the total of those 10 open positions, if they all got stopped out and went against me, I would lose no more than 6%. So that's what I mean by total open risk. For one, I just want to make that clear, that nobody thinks I'm trading with 6%. As my parameter for each trade, because I usually actually trade 50 basis points, so 0.5% on each trade. And in a bull market, I'll go up to 75 or 100. But that's about it. So that controls the other side of the equation. You were talking about feeling like a peacock and you're a king and you're the king of the world, right? Because I never allow myself to put on these huge size trades, right? And if you have, a string of trades going in your favor, that's definitely when you want to get aggressive, but you never get too aggressive. Like I'll never put 2% of an account in one trade. So I'll never get to the point where I'm just getting super greedy and super crazy. And the thing is, if you hit this winning streak and it starts to come to an end, and if I have 2, 3, 4 trades in a row that go south, take a break again. So the whole idea is to try to keep an even keel based on sizing and your risk management. And I think that really helps moderate the emotions.
Yeah. So what are the key point advice that you can put out there for new traders, or even any other trader that are consistently not being consistent and struggling each and every day? What is your key point that you think viewers should take from this interview?
Yeah, I think the person that is well, first of all, in this market, probably everybody's struggling, right? But if you're the kind of person that just feels like you have no direction, I think you just have to really focus, pick something, specialize in something. Because I think the thing that gets people most confused in the beginning, and even if they have experience, is thinking, okay, the market's changed a bit, so I've got to now become a day trader, or I've now got to become a pullback trader, or like just changing what you do entirely. And I think people need to really be wary of that, because it's like if you get really good at something, let's say you're a really good baseball player, and you've spent your whole life being a baseball player, but it's suddenly winter. Does that mean like you need to go be a competitive skier, or are you going to wait for the weather to change and you can actually play baseball again, if that makes sense? You know, I think people need to focus on what they're good at, get good at something, first of all, which takes focus, and then focus on what you're good at and not try to trade every style, every market in every strategy. Because I think they will always produce random results. And you will never have consistency because your trading style is built on randomness. So I think that the concept of being really focused on something and specializing in something is a really strong concept. People tend not to want to do that because the market always changes and there's no single strategy that works in every environment. Like mine is certainly not exactly killing it in this environment, that's for sure. But you got to be patient. You got to be patient, and it will, in the long run, being patient pays off. So long story short, again, I have a tendency to babble. I think specializing and focusing on, maybe one or two strategies, especially in the beginning, is the way to go.
Yeah. Sounds perfect. Matt, again, thank you so much for your time. I'm sure everyone who watched this enjoyed, learned a lot. I will share the link for Matt's Twitter in the description below. If you enjoyed, please hit the like and